In this part of the session, we will be dealing with another question where we have to prepare the final accounts with adjustments. Especially, we will be dealing with a solved example of where we have adjustments of bad debts and reserve for bad debts. So with that note, let's just quickly look at the question. The question goes like this: from the following balances of MS Keshav Brothers, you are required to prepare trading account, profit and loss account, and balance sheet as on 31st March 2017. They have given us the trial balance, and from this trial balance, we will have to go about with the preparation of the final accounts, and then they've also given us some adjustments. So let us start preparing this particular question. So let's just quickly, in a glance, let's quickly look at the adjustments. They've given us provision for bad debts. They've given us a further bad debts. So further bad debts is nothing but new bad debts. Then rent received in advance. Then we have prepaid insurance. Then we have depreciation. So these are the adjustments that we have to deal with. And let us start off with the preparation of these numerical. Now we will be preparing the final accounts of MS Keshav Brothers. And remember, we've been asked to prepare all the three statements. We'll have to prepare trading account, profit and loss account, and then the balance sheet. So let's start off with the profit and loss account. Let's start off with the trading account. The first item that we have to consider is your opening stock. So how much is the opening stock? Opening stock is 60,000. Then we have to consider purchases. Now purchases, we know the value is 2,50,000. Okay, we know that purchases, the amount is 2,50,000. But along with 2,50,000, we also have to consider purchase return. How much is purchase return? Purchase return is 2,500. So from purchases, if you subtract purchase return, you will get net purchases, and net purchases works out to be 2,45,500. Okay, it works out to be 2,45,500. Now let's move on to the next section. The next section that we have to consider is your direct expenses. Now, what are the direct expenses that we have? The direct expenses that we have are wages. We have to consider wages, and okay, so wages is a direct expense. Please remember what is meant by wages. Wages refers to the remuneration that you pay to your laborers. Okay, it refers to the remuneration that you're paying to your laborers. So that is what is meant by wages. So how much is wages? Wages is 1,200. Okay, wages is 1,200. Let's just quickly see if we have any adjustments. No, we do not have any adjustments with respect to wages. So we can record the total amount, and the total amount is 1,000. It is 1,200. Then we have carriage inward. What is meant by carriage inward? Carriage inward refers to the logistics cost or transportation cost of raw material. Okay, so that is carriage inward. Carriage inward is 500. Okay, the amount is 500. Then next direct expense that we have is factory rent. Okay, so the next direct expense that we have is factory rent. So now let's consider factory rent. How much is factory rent? Factory rent is 1,450. Okay, factory rent is 1,450. Then what are the other expenses that we have? We do not have any other direct expenses. Now let's move on to the credit side. Credit side, we have sales. How much is sales? Sales is 3 lakh. From sales, we have to subtract sales return. Okay, from sales, we have to subtract sales return. Sales return is 2,000. Okay, so from that, when we subtract sales return, you get the net sales amount, which is 2,28,000. Then we have closing stock. We know that closing stock is zero. Okay, closing stock is zero. So when you consider the net amount over here, we are having a loss. Okay, when you consider the net amount over here, we are having a loss, and the loss is is 82,650. We are having a we are having a gross loss, and the gross loss is okay. I'm so sorry. I'm so sorry. I think I made a mistake over here. Okay, so here, as you notice, the okay, just give me a quick minute. Okay, I had made a small typing mistake. Your net sales should have been 2,98,000. Okay, it was my mistake. It should have been 2,98,000. So since it is 2,98,000, if you notice, the credit side is more than the debit side. Okay, so the credit side is more than your debit side. So which means the balancing figure, okay, the balancing figure in this case will be falling on the it will be falling on the credit side. Why is it falling on the credit side? Because okay, just give me a quick minute. Okay, so it will be falling on the credit side, and the reason why it will be falling on the credit side is because the debit side as of now is more. Okay, so the debit side as of now is more, and if you total up the debit side, the total works out to be 3,10,000. It works out to be 3,10,650. Okay. So the total on the debit side works out to be 3,10,650, which means the credit side should also be 3,10,650. Okay, the debit side should also be 3,10,650. So, which means in this case, the balancing figure will be falling on the credit side. So if the balancing figure were to fall on debit side, it would be gross loss. Okay? It would be gross loss. So gross loss is what we will have to calculate right now. Okay, we will have to calculate the gross loss. So now let us quickly calculate the balancing figure. So the balancing figure would be 3,10,650 minus 2,98,000, which means the balancing figure is 12,650. Okay, it's a gross loss of 12,650. So that is the balancing figure. Okay, that is the balancing figure. So here in this case, the balancing figure is falling on the the balancing figure is falling on the credit side. Okay, so dear students, with that we've completed the preparation of the trading. The next statement that we have to prepare is your profit and loss account. In trading account, since we've got gross loss on the credit side, into your profit and loss account, you will have to bring down your balance onto the debit side, which is 12,650. Okay, you will have to bring down your balance onto the debit side, which is 12,650. Now let's start considering the expenses one by one. So the first thing that we have is interest. So to interest paid, and then interest paid is 2,000. Then we have salary. And the salary is 2,500. Okay. Salary is 2,500. Then we have carriage outward. What is meant by carriage outward? Carriage outward is nothing but the transportation cost of your finished goods. Okay, that is the transportation cost of your finished goods, and transportation cost of finished goods is 700. That is what is meant by carriage outward. Okay, then you have office rent. Okay, let's quickly look at the office rent. Office rent is 1,400, 2,300. Office rent is 2,300. and then we have insurance. And for insurance, we have an adjustment, but let's first consider the insurance premium. Insurance premium, the amount is 780, and from insurance we have prepaid insurance. When you have prepaid insurance, you will have to subtract. Okay, when you have prepaid insurance, you will have to subtract, and prepaid insurance is 200. So that works out to be 580. Now there are some more items that we have to consider. So let us look at those items one by one. The next item that we have to consider is your bad debts. Okay, so bad debts, I'll be doing that a little later, because we have to consider bad debts and then reserve for bad debts, all this together. So because of which I'll be considering that a little later. Okay, so bad debts, that is also uh, over. Now there are some more items that we have to consider. Uh, Now let's move on to the okay. So there is commission that we have to consider. So you have to commission commission paid, and the amount is 500. Bad debts, reserve for bad debts, I will be doing that together. Now let's look at the credit side. Credit side, we have to consider the indirect incomes, and the indirect incomes that we have are uh, rent received. So by rent received, and the rent received amount is 10,380. Then you have commission received. So commission received also we will be considering. So commission received is 16,000. Commission received is 16,000. So with that, we have completed the credit side. Now let's move on to the adjustments. The first adjustment that we have is provision for bad debts and the reserve for bad debts, that I will be dealing a little later. So let me finish off the other adjustments and then I will be coming back. Then you have rent received in advance. So rent received in advance, please remember, it is income received in advance. So that is an expense for you. So rent received in advance, the amount is 6,000. Okay, the amount is 6,000. Then we have to consider depreciation. So let us consider depreciation. We have depreciation for the 3 fixed assets, and depreciation on furniture. Okay. Depreciation on furniture is calculated at 5%, and it is 5% of 22,500. So which is 1,125. Then you have depreciation. You have depreciation on plant and machinery. Depreciation on plant and machinery, that was at 6%. 6% of 1,30,000. Okay, so 1,30,000. So 6% of that works out to be 7,800. Then you have depreciation on building. Depreciation on building works out to be 2,80,000. So depreciation on building. Okay, depreciation on building is at 7%. So 7% of 2,80,000. That is 19,600. Okay, that is 19,600. So that is what is meant by depreciation on. Those are the amounts with respect to the depreciation on the fixed assets. Now let's start off with the treatment with respect to bad debts. Now please remember, bad debts, we have in this particular question, we have old bad debts, we have new bad debts, we have new reserve for bad debts, and then we have old reserve for bad debts as well. So old bad debts, this is the bad debts that is mentioned in your trial balance. This is 3,500. From to this, you have to add new bad debts. So how much is new bad debts? New bad debts is 2,000. Okay, so that we've considered. Then we have to add new reserve for bad debts. Okay, we have to consider new reserve, or we have to consider new provision for bad debts. Now, when we are considering new provision for bad debts, please remember we have to create that at 5%. Okay, we have to create that at 5%. But 5% of what? It is 5% of what amount? It is 5% of debtors. So so this has to be created at 5% of debtors. Okay, this has to be created at the rate of 5% of debtors. But when you're considering debtors, you have to consider debtors minus new bad debts. Okay, you have to consider debtors 5% of debtors minus new bad debts. So which will be 5% of, let's quickly go back to the trial balance and see what is the value of debtors. The value of debtors that is mentioned in the question over here is 50,000. So it is 50,000 minus new bad debts. How much is new bad debts? New bad debts is 2,000. Okay, so this is 2,000. So this will be 5% of, so this will be 5% of 48,000. Okay, this will be 5% of 48,000. So let's go back to the numerical and let's complete this over here. And it will be 5% of 48,000. So 5% of 48,000, the amount works out to be 2,400. From this, we will have to subtract old bad debts, old provision for bad debts. Why are we subtracting old provision for bad debts? Please remember, old provision for bad debts, that is the amount that is remaining from the previous year. Okay, so since it is the amount that is remaining from the previous year, this is a income for you. Okay, so this is a income for you. So let us quickly total up all this, and then let us find out what is the amount. So it is 7,900 minus 1,550. The total amount works out to be 6,350. Okay, the total amount works out to be 6,350. So with that, we have completed the treatment of the adjustment. Now let's quickly try and see which side is more. Okay, let's just quickly try and see which side is more. So if you were to look over here, here in this question again, if you would notice, the debit side is more. Okay, if you notice over here, the total, you would notice that the debit side is more. So which means the balancing figure for this particular question would be falling on the credit side. Okay, the balancing figure will be falling on the debit side. So credit side. So here the debit side's total is 62,105. Okay, the debit side's total is 62,105, which means the balancing figure will be falling on the credit side. Since the balancing figure is falling on the credit side, it would be net loss. Okay, it would be net loss. Okay, it would be net loss. And let me just quickly calculate the balancing figure. The balancing figure works out to be 35,725. Okay, the balancing figure works out to be 35,725. So with that, we have completed the preparation of the profit and loss account. The next statement that we have to prepare is the balance sheet. Okay, the next statement that we have to prepare is the balance sheet. The last statement that we have to prepare is the balance sheet, and let's start off with that. We will have to start off with capital. The capital opening capital amount is 2,20,000. We do not have any additional capital, neither do we have any uh, we do not have any interest on capital. Then in this case we have net loss. Since it is net loss, we will have to subtract. In the previous cases we were adding, but here we will have to subtract, and then it is 35,725. Okay, so 35,725, so that we will have to subtract. We do not have drawings mentioned in the question, neither do we have interest on drawings. So we just have to write the total over here, and let me just quickly do that. So the balance works out to be 1,84,275. It works out to be 1,84,275. Now let us quickly fit in the other items that we have to put it on the into your balance sheet. You have current liabilities. The current liabilities that you have are creditors, 2,50,000. Then you have bills payable. Bills payable is 70,000. Okay, bills payable is 70,000. Now let's try and fit in the other items. Then you have your fixed assets. The fixed assets that we have are plant and machinery. Plant and machinery, we have an adjustment, and the adjustment is depreciation. The depreciation, the amount is we have to subtract the depreciation amount. So the depreciation amount that we have to subtract over here, it is 7,800. So from 1,30,000, when you subtract 7,800, the net value of your plant and machinery is 1,22,000. Now let's look at the other assets that we have to fit in. The other assets that we have to fit in are your furniture. Okay, furniture, the amount is 22,500. Then you have building. So building is 2,80,000. Okay, then you have 2,60,400. So let's see if there are any more fixed assets that we have to consider. No, that I think that is pretty much it with respect to the fixed assets. Now let's look at the investments. We do not have any investments. There are some more current assets that we have to fit in. You have cash in hand. Cash in hand is 2 lakh. Sorry, it is 22,500. So cash in hand will fall on the that will fall on the asset side. Then you have cash at bank. Cash at bank is again a current asset item that the amount works out to be 35,000. That also we have plugged in. Now let's see if there are any other items that we have to put in. We have to add debtors. Now with respect to debtors, there is an adjustment that we have to carry out because we have there are some adjustments that we have to account for. So from debtors, we will have to subtract new bad debt. New bad debt is 2,000. From this we have to subtract new provision for bad debts. So new provision for bad debts, the amount is 2,400. So these we will have to subtract because these were items of adjustment. And please remember, any item of adjustment you will have to treat it twice. Okay, it has to be treated twice. So let us calculate the net amount, and it works out to be 45,600. Okay, now let's see if there are any items that we have missed out on. We have to consider bills receivable. Okay, bills receivable. I may take a few more minutes because I have to finish off this balance sheet for you today. Okay, so bills receivable also we have considered. Now let's just quickly look at the adjustments to see if we have missed out on any items from the balance sheet. We have to consider rent received in advance. So rent received in advance, since this is income received in advance, we are treating it as an expense, and in your balance sheet you will have to treat it as a current liability. Okay? You will have to treat this as a current liability in your balance sheet. So let's see and then we also have prepaid insurance. So prepaid insurance, please remember, we will have to treat that as a current asset. Okay, prepaid insurance, we will have to treat that as a current asset. Prepaid insurance, the amount is 200, and that also we will have to consider. And okay, so with that, we have completed almost all. We have completed all the items, and our balance sheet has perfectly tallied, which means all our treatments are absolutely correct. So we have completed the preparation of final.